the best overall way to look at this is that the average bank had something like 300 products. And so when you have 300 of anything, you're not really good at any one of those things generally. You have something good. And then what happened is the fintech started to come saying, banks can't be very responsive because they're giant and they're regulated and they're big organizations. And so they would pick off every individual product and start building a better version. And so we started seeing the first of this with, simple and kind of just like basic debit cards and what Chime has done. We started to see this with wealth management, with Betterment. And then there was people like us who actually went after a group that banks were totally ignoring altogether. I mean, we've built now a billion-dollar business on, frankly, a group of people that everyone was ignoring. And so I think it's both of those things, is that the fintech industry today, and I think when it really got going, 5 or 6 years ago, was about picking off a single product. And so let's call that unbundling everything and creating this. Remember, the internet is one giant comparison engine. So consumers got very good at using aggregators to find the best of one thing. And now I think we're starting to see the phase where all the fintechs are getting big enough, they're starting to bundle. So we are now seeing that they have a consumer base and they're starting to add new things to that group. And so it's going to be really interesting to see how that will play out.
The unique opportunity that businesses architected on modern technology can do is rebundle these products in a way that enhances the experience. So I think traditional banks, they had these 300 products, but every product felt like it was built by a different company, and they didn't necessarily, the products didn't necessarily sort of share data or have the context around who you are as an entire customer. And I think this is the opportunity now for fintechs to start to rebundle these products in a way that adds value and is accretive to the entire experience.
From fraud detection to the way we make investments to just generally like overall operations of the bank, that's going to be a giant one. I think we're still just seeing like the very, very early innings of crypto and blockchain. I don't know what else you want to pick up on.
Yeah, I think that there are some new blockchain technologies that are coming out that are approaching the speeds. I mean, theoretically approaching the speeds that you'll see with things like the Visa and MasterCard network. But I think there's a couple of different areas that I think where blockchain is really starting to, could start to have an impact around having a distributed sort of trustless network where you don't have to have a central point of failure, with trust. But then I also think that from a cost standpoint and an energy standpoint, some of the new technologies that are coming out, I think could have an impact, but are still very, very early. But it does feel like it is an inevitability. It's just about sort of when does the right piece of technology get adopted by enough people to sort of flip. If we had known the complexity around capital markets before we started this business, we may not have even started it. It's a pretty archaic, it's a sophisticated, pretty archaic industry. And it is, I think, very much in the same way as venture capital. If you think about the entire capital markets, it is very much relationship based. And it's human powered and relationship based and judgment calls. And so I think there's a big opportunity. I mean, it's all part of the same chain, right? Whether you think about payments and, very, very small microtransactions, all the way up through, lending and risk, all the way to where that risk is allocated in capital markets and insurance. It's really about how quickly can you decision, accurately price, and track risk. And so I think this is where we're excited about, AI and technology being able to do that at a massive scale, and then to be able to provide transparency and liquidity to the capital markets at the high end, to then lower the cost to the end consumer or business owner, because they're getting accurately priced capital or accurately priced risk without several middlemen in the way.
When we started, I mean, we're kind of capital markets investors, like close to lending. And that space was very beaten up when we got into it. Nobody was excited about businesses that looked like that. Lending Club had taken a huge tumble. There was lots of issues with so many of the fintechs in that space. And so, there was, and, then we kind of forged the path where I think a lot of that, changed and sentiment changed over time. So, today payment companies are doing very well and everyone's very excited about them. But I think if you're the innovator and you're looking to start, I wouldn't think about it as, what space is hot right now, I need to go into it. I'd say, which space is, the founders or the consumers in that space being really underserved by traditional products. And I actually think there are still so many places in finance where people are, just every part of the experience is old and archaic. And I think that really involves everything that you talked about. And so as I always think about that when I think about get people that are asking too many things in trends, everyone's like, well, you're in such a hot space now. I'm like, but it wasn't hot when we started. And it's a really hard thing to remember unless you were living through it. And trust me, there were a lot of people along that journey that were like, these companies don't do well, you'll never go public. Like there was a lot of negativity in that space. And at the end of the day, we kind of just believed in the size of the market and we believed that we could build a better product. And then you can let the industry work out. I think we're seeing fintechs now start building infrastructure to sell to banks because the infrastructure in the banks are so old. The best analogy I can give you is like, banks and fintechs are actually trying to do the same thing. We're trying to build this seamless customer experience. But I would describe it as like, there's like a hill here, and in the back end, we're like connecting a million ugly wires. And at the top sits the customer experience. I mean, like wires still clear through the Fed. Like it's actually crazy some of the things that still happen, in the banking industry. But I don't think that I would say that we are certain that, there's certainly lots of banks that have been innovative and that have provided themselves as, banking as a service and products as a service. But we've also seen, I think, an equal number of fintechs try and build infrastructure and sell directly into banks. And so I think that that battle is far from won.
There's more partnership opportunities between fintechs and banks than there are competitive dynamics. So, we partnered with Silicon Valley Bank, who, they bank many online, they probably bank more internet businesses than any other bank, or certainly, than most. And, but they realized that our product suite was something that they didn't have the capabilities of offering. And so we were able to partner with them to offer our technology and our products to their banking clients. And then, as those companies grow, and as they have needs for Silicon Valley Bank's, credit products, we could graduate them into those products as well. And so we're starting to see many partnerships that look like that, where it's, a shared piece of technology, shared customer experience, where, either a fintech like ours can augment an existing bank's relationship with their customers, or a bank can work with a fintech like ours to lower our cost of capital, increase our access to capital, offer products that, as a pure technology company, we aren't able to do. And so, I think the most forward-thinking banks are looking for ways of deepening those partnerships with the really the winners in the space. And, there's so many fintechs out there, so it's hard to pick which one, but, businesses that have proven their ability to serve customers at scale, manage funds and transactions at scale, more and more banks are looking for ways of partnering, rather than trying to reinvent the wheel and sort of build it in-house themselves.
And the other thing that I think about is like, it's kind of a race on both ends. So the fintechs have no customers, but they have a lot of innovation. So they create innovation and then they're trying to attract the customers. And on the other side, the banks have all the customers and very low innovation oftentimes. So they're trying, can the banks innovate faster and keep bringing those products to their customers, or will the customers move faster to the new fintechs and come there? And that's really kind of the balance between the two. Pretty compliant. There's a lot of work. Andrew and I, like as founders, spent years not sleeping at night, making sure that we were compliant with things as to do that. I mean, look, I think ultimately, like, big bank CEOs can complain about that, but this is a very regulated space, and it's not like anyone gets a free lunch. Like, yes, there's certainly some sandbox environments, but you actually want that. You want a world and a country with way more innovation and people that are willing to try things. Because again, many of these rules were put together, 50 or 100 or 150 years ago when we had very different problems. I mean, one of my favorite stories is that, when automated ATMs came out, people thought there was going to be chaos. Like they thought this was going to produce violence and people were going to force you to go to your bank machine and pull out money and like be held up at gunpoint. Like there was a huge thrash when that innovation came out. I mean, this seems so obvious that you'd have automated bank machines today. But no, I don't generally think that the fintechs are getting a free lunch here. And I think you want an environment that encourages that. And frankly, those sandbox environments should be available to anyone, right? If, the bank wants to produce a small innovation team to use, a different environment, they should be able to do it as well.
But yeah, I would say that any fintech of scale has, a sizable compliance function, because
And a lot of lawyers.
At the end of the day, you're partnering with a bank, whether it's on payment processing, whether it's on the credit side, like you're partnering with a bank at some point. And so then their compliance shifts onto the fintech. So maybe in the very early stages, people are innovating in a sandbox or are skirting compliance. But when you get to scale, you have a compliance function that, may not be at the same scale as a bank. But part of it is because we've used technology to ensure, a lot of our audit and compliance requirements meet the needs of our partners and the partner banks that we work with. And so, I don't know. I think the other thing is like, when you do get regulated as a bank, you drive down your cost of capital. And so it's sort of like when you want to sort of make that switch of saying, okay, we're going to apply for a bank charter or what have you, and trade off sort of, okay, we're going to manage all the regulatory and compliance ourselves, but then we can borrow from the Federal Reserve, for example, and get the FDIC insurance or whatever. So there's that trade-off that matters at scale and matters when you're valued, and when your shareholders are expecting a sort of EBITDA margin and net profits and things. But in fintechs, you're really more focused on growth and growth opportunities, and speed is valued over sort of profit margins. And so we pay a higher cost of capital, but we're able to move a bit faster and partner with folks on those components.
If you have a great idea and if you have great data, you should be able to get that business funded. I think that hasn't existed, certainly in San Francisco and not around the world.
Yeah, I would say the biggest, one of the big trends that's happening is embedded. I mean, this is happening with commerce and fintech in general. I think, instead of it feeling like I do one thing here in my business, business management application, then I go to my bank and execute something. I think it's going to start to feel much more like a command center or something that you can actually operate your entire business or your entire personal life in one area. Instead, and this, I think this will happen in the consumer world as well, where people are looking at their own, health and fitness and, their own personal goals. And there's going to be, wealth management as part of that, right? And so I think we're going to start to see a much more integrated solutions where companies that don't advertise themselves as fintech companies, but have a fintech component to them. I think that's really where things are starting to move.